Good morning, all, and welcome to Trading with Larry. I'm joined by Eric Shamalov on a daily basis and Thomas Maples, my analyst behind me, who is out running a mission. He'll be back in a little bit. I hope everybody had a great holiday weekend, long and relaxing, but back at it. And markets had a lot of news over the long holiday weekend. Top of mind is Trump rolling back tariffs 1 month on the EU. I just want you to know before we get into that, if you recall, he said that he doesn't want a trade deal and he doesn't want to talk to them and he's putting 50% on, et cetera, et cetera. And once again, one thing you're learning as a trader through all of this is really anything can happen and you can't take anything that Trump says in a serious manner because you don't know what he really wants. I still believe he doesn't want trade deals, but I think he's actually afraid to put the tariffs in. That's what I think because he knows, like we've been discussing on the air, that tariffs are bad for us. So, and it affects us probably more than these countries. So, he's stuck between a rock and a hard place in my mind. And, right now the market is having a positive reaction of about 1.5% across the board on the equities over the long weekend, where S&P is up 80, Nasdaq's up 300, and the Dow's up 500. And I guess they're happy that he pushed back the tariffs, from being implemented at 50% another month. Again, I'm sticking to the mantra, and then I'll throw it to you that not a lot of trade deals are going to get done anytime soon. I think we're going to approach the 90-day mark, which is July, I think, 9th or whatever. And I think these tariffs are going to come in and it's going to affect the market. But right now, for sure, businesses have stopped operating, in the sense that they don't know what to expect. So, here's where we are. If you look at it, the S&P is exactly unchanged for the year. Nasdaq is down slightly, and the Dow is actually down slightly. So we're kind of flat on the year all around, up, down, and everywhere around that. I think it's a miracle that the market has come back. But again, we always talk about price is everything. So price is here, and this is where we are today. And we'll get much more into what we're thinking for the day. But I'll throw it to Eric, who's in a clandestine location right now. I don't know if he's going to disclose where he is. Could be scary. But I'll throw it to you, and you could sort of assess what you're seeing here in the market.
Thank you, Larry. You mentioned, as a trader, how do you handle these headlines? And I think it's very important. It's almost like you have to expect that a headline is coming and it's better to react to it rather than be positioned before it. And I feel like these headlines are going to be coming pretty frequently over the next few weeks. He stated he's going to be uh, releasing what these tariff rates are going to be over the next couple of weeks. And I think this is just the beginning. I think we're going to get a lot of headlines. And I'm just kind of thinking, is it better to position after the fact and react after the fact rather than be positioned before it? But to me, the number one macro development is what's happening in interest rates. They've been coming down recently over the last few days. We had that big scary bond auction last week, and rates are have been dipping since. Now we're going to have a big Japanese auction coming up tomorrow, which I think everybody's going to be paying attention to. So within the macro circles, it feels like a lot of people are starting to jump on the bandwagon that this is a big buying opportunity in bonds.
You really think that? I don't see
I
that at
don't.
all.
I actually think it's ironic. A lot of the same people that are trying to buy bonds are thinking there's going to be high inflation. So which one is it?
Well, bonds are at 4.5, basically 447 and a half, up again today for the second day. I mean, the high yield was only 460. It's not like we're so far from that. I mean, they could take that in one day. Um, and I do believe that they will. And it's interesting. I didn't really look at this because I don't trade the Japanese bond market anymore. I used to trade a lot of JGB. Um, Back in my day with my hedge fund. We've been looking at the 10-year note, but if you look at the 30-year, I don't know if you can pull a chart on it. I mean, the yields have exploded up on the 30-year. I mean, exploded. So there's some kind of issue there. You can get yield there really good. I think it's in the threes potentially. The 10 years only in the ones, but I think that trade, and I don't know if you can pull it on. Oh, because you're traveling, you probably don't have your Bloomberg in front of you. Um, but that in itself is scary. So rates are very high in Japan. They're also high in the UK, higher than us. I don't think we have anywhere to go pretty much but up in yield and down in prices from here, unless we see a major slowdown, and we haven't seen it. We've seen creeping higher inflation and a market that somehow has not slowed down. And I don't know if this is a delay for 2 or 3 months, but it's important to watch because in 2 or 3 months, I believe you're going to see a slowdown. So we're going to be stuck between a rock and a hard place with rates, with inflation. So that's sort of how I see it. Um, I want to shift a little bit to something that's a little bothersome. Is with an equity move like this, which I'm not sure will hold fully today, but it's here now. An equity move like this, you would think currencies or the USD would be much, much better than where it is. It traded 114 overnight against the euro, and that's like almost the high of the whole move. Got up into the 115s when we had that massive dislocation down when we made the lows on S&P. But you would think this thing would be below 110. So that's a clue that I'm looking at that leads me to believe that maybe this will not hold, or maybe it's a good time to buy the dollar. So, again, I don't love these pair trades, but you do. So I would think a good pair trade might be potentially short equities and long USD. You may see a bigger move in USD coming in here if this move will hold, but I'm not fully believing it will because wouldn't you think that the euro would be much, much lower and the B pound and I mean the B pound's almost 136. I mean that's
Yeah,
highest
well,
level
the
it's
dollar
been.
hasn't been the dollar hasn't been reacting positively to any positive headlines related to tariffs at all. That's one thing
Uh,
that I've noticed over the last few months is any positive news we see, the dollar's not reacting positively. Uh, and obviously, interest rates up until maybe a few days ago hasn't been going down either. So, which one is right? That's the big question.
Yeah. And then you would think if the market is really, really good, the other macro piece we look at is crude oil. And that hasn't rallied much. It's 61, not near the high where we thought it would maybe break out at 64. These are not big numbers, as far as movement, but this thing is certainly in line. And then you throw gold in, which is down, a smooth 60, 70. That's showing weakness, not near levels of the low of this move, but, definitely have come in. So there's a lot, there's a lot of cross currents here. S&P up 80. Again, I think it's a short. It's funny. You said earlier, like, it's almost like a day trading market. I mean, we have positions short. I'm telling you, on Friday, I was feeling pretty confident that the market was going to break lower. Okay. Then you have a fake headline or a fake news story, that, they push the tariffs out a month. I mean, they pushed the tariffs out a month. Is that really worth a percent or percent and a half? Why is that worth so much? Is it people are
Yeah.
offside?
I had the same question. This is just a very headline driven market, very reactive market. I think the way to play it is to just expect headlines and react to them rather
Yeah,
than
but how do
I as
you?
well on
Yeah,
Friday. I thought, okay, well, we had a big positive news cycle. Here comes the negative news cycle. If you believe news travels in cycles, which I do, we had a lot of good
not with
news.
Donald Trump. With Trump, you don't know what to expect. I mean, here he comes out and says, "We don't want to negotiate. We don't want to deal." And then he has one conversation with someone from the EU, and he's
Yeah,
like, "Oh yeah, we had a great conversation." Blah blah blah. And then my better question is: the EU knew this was coming down the pipe, okay? Possibly. So why do they need another month to figure out what they're going to do? A full month. How many countries are in the EU? 26, 33. It's a massive number. Okay. Um, and, you know, how do you get all of those people on board with what the EU is going to do? Yeah. So that's really,
yeah. I think that's a great point. Like you look at the countries that are 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 the big leaders in the EU. You have France, you have Germany. Then you have the southern European countries. Every economy is so different, and tariffs are going to hit each one in such a different way. It's it's problematic to have a one all-encompassing deal.
yeah. I don't see it. But you never know. Since we've come in on the air, the S&P is dropping a little. I would have liked to sell the opening. I think this is an overreaction to the upside, but it keeps us in a range, and we're back to unchanged on the year. Um, look at some of the stocks. Like look at Apple. I mean, I'm sure it's up today, but Trump wants to tariff Apple. I mean, what are they, a country? He wants to tariff them. I mean, it's pretty unbelievable, and it's still under $200. I think it goes lower from here. I just think they have a lot of problems and a lot of slowdown. And I saw also, and it's up a lot today, Tesla, but Tesla's EU sales were down 50%. I mean, that's a debacle. I just think that, the car is out of favor. Um, and it's going to be hard for them, to shine up their image after what has gone on here. So, I think those are two interesting shorts. Um, and really, that's what I'm seeing from here. We're going to start seeing some numbers this week. Nothing, crazy. We had durable goods. Um, Kind of a quiet week. We have FOMC minutes later in the week, GDP, price index. So we do have some numbers. And at the end of the week on Friday, we have PCE, which is a Fed favorite. They love that number. Um, it's a prices paid number showing inflation. We'll see kind of what that says, but I think I
I
think
think the
volatility.
I think the action uh, might be at around what is it 11:35 p.m. tonight. You have that 40-year bond auction in Japan. I think the market is going to trade pretty hard around that. Not sure
Really,
what direction, but
I'm going to be sleeping, so I don't know. That's for the young guys. They could stay up all night and wait for that auction. I've done that many nights in my life. I've had It's funny. I talk about trading a lot, and I'll tell you, in the year 2008, I probably did more all nighters than any human alive. I think I stayed up for a full year straight trading overnight. Um, Very different markets. You couldn't really trade off your phone. You needed really a hard computer, not even a laptop. You could. And then the way it worked back then is you had 24-hour coverage. So I had people around the world watching markets and calling me all night. And it was crazy, crazy times. But we're far from that market, for sure. Markets, I'm shocked that the market is flat on the year coming into mid-year. But we'll see, how it ends. The story is just getting written, for the year in my mind. And, you have, tariffs that somehow have been implemented, stalled. No one knows what they are. And, like, think about it. Right now, China's operating on a 55% tariff. Okay. Do you think they're doing business here? Do you think they want to do business here? Like, come on, at a 55, you can't make money. There's no money in it. So I think these ships are not coming in with any goods. I think that when they do, the containers are three-quarters empty and going to fully empty. And I think that's something we're going to have to deal with moving forward in the future here. Is the fact that goods are not going to be coming in here. And I think, that in itself will create inherent inflation because there are certain products that you can only get from China, and they are 100% moving away from us. I think the deals being done with them or the talks are very minimal. I don't think we're now 3 weeks away from the original, and there's nothing on the tape. Maybe they're chatting a little, but I don't see anything. I think things are gonna get a little more contentious. I think there potentially will be a deal of some sort with the EU, but it's not going to be full and comprehensive, and they're not going to get, you know, 20 something countries to buy all of our products. Like, I don't know what we want. What do you think we want? Like, in the ultimate sense, what do you think we want?
Revenue, pure and simple. I think he needs
Revenue
cash.
from what? Their products coming in? But
Yeah,
many of those products are our own products. There are products, and I've been reading a lot about these countries are coming up with really, really interesting ways to get their products here. So they're looking at the countries that have the lowest tariffs, and they're shipping to those countries and then shipping into the United States. So they're already gaming the system. So we'll see. And the tariff numbers that we're looking to make are so minuscule compared to our debt. And that brings me, you know, to the point of what we talk about, like financing of this debt should have been done a long time ago. They had rates down at zero. The government should have been printing bonds like there was no tomorrow. And the demand for bonds at that time were very, very strong throughout the world. So, you had China, which was our biggest buyer of bonds, okay, was buying bonds. Now they're not buying bonds. So they're running into issues here in financing the debt, moving forward. But we'll see how that works. I think there's going to be some hiccups in the market moving forward. Again, like you're talking about, headline risk and whatever. I think the headline risk is potentially going to wear off to these computers. So the algo reads what's going on, and then it basically reacts. And what they're going to do is sort of dumb down the computer or the reaction, because think about it. Wednesday of last week, he said he's raising tariffs on the EU to 50%. He's not negotiating. He doesn't want a deal, this and that. Literally 3 days later, he says kind of the opposite. We're going to work on a deal. We had a great talk, whatever, whatever. Now, you don't know if anything's ever going to come from that, but right now the computer overreacts and like, oh my God, we don't have a deal
Well,
right.
the reactions have been smaller since Liberation Day. They've been smaller and smaller and smaller. So
I don't
I
know
think you're
what
right.
that
I think you're actually right
means.
that there is a dumbing down of the algo.
Put
I don't
up
think it's
100
going to
S&P.
happen. I think it's already happening.
Yeah, but up 100 S&P is pretty good. I mean, you're not going to get, how much more can you get than that? I
Well, how
mean,
much of that is so? I was texting you yesterday about the holiday trade, right? Whenever we have a holiday weekend, I've noticed overreactions on fluff on air. This one is a headline driven one, but some of that's got to be fluff, right? It's a holiday. There was no volume there. There were no real traders trading there. Everybody was on vacation.
well, I think it was interesting. I don't know if you saw when that headline came out, but it came out after six
Right
o'clock.
at 6, yeah, or like
No, after
right,
six.
yeah,
After
maybe a couple of minutes, right?
It was
How
a
far?
few minutes after six. The
Yeah,
S&P was actually down about 20 handles, okay, and then ran,
exactly.
80 handles on the headline.
They got to be
I,
watching the
you
market.
got to believe somebody's trading here
Yeah.
off this
Well,
in the administration.
yes.
I mean,
Exactly.
it's like, hey, let's release this headline at 6:02,
I know. I
not at
know.
5:50. So they
I think normal people don't realize this, but like the people who like trade 24/7, they see that 6 o'clock opening print, and the market is down. All of a sudden, you get the headline, and you're just shaking your head. You're like, "Wow, they got him again."
Yeah. So I think I think you just have to be careful. I don't it's funny because the market was lower, which it should have been lower. Then they come out with a delay of a month and it rallies the market a percent and a half. What does a delay of a month do? I don't know. We're going to have to meet the maker at some point. And whether that's in June 6th or July 9th, I mean, is that really a lot of time? I mean, I don't know how you're going to negotiate a full deal in a month, but somehow they will. I mean, don't you think, like, if you really sit down and think about it, like, how long does it take to really do a deal? I would think it would take months and months and months and months. I mean, just so many things to discuss, so many areas to go over to make a full and comprehensive deal. But what I think is happening here, to be honest, is the other countries are learning to game the system. They're gaming him. They know how to play him. Okay. He puts the tariffs on. He's mad. They reach out and call him. They say, "You're the king. We're going to do whatever you want. Give us another month." Okay. But what's happening is I think we're losing the power on this thing. And eventually he's going to have to tell the truth and put the tariffs on and just live with it.
Well, he's
And
going to put the tariffs on. They're going to be none of these. The tariff rate isn't going to zero for any country,
mhm.
right? The tariffs. The question is like, how big are the tariffs?
Well, a 50% tariff, no one can live with. Even a 20% tariff, no one can live with. But, he's saying 10 across the board. I, I don't even think, listen, he could do 10 across the board. Then he'll say, oh, no, I want 30. It's never going to end. Listen, it's never, there's going to be cheating. Oh, this guy cheated. It's going to be, which is great for us as traders. We're trading this market on a day over day basis. It's great for us as traders. It keeps volatility in the market in some sense. Right now, I look at this like a heavyweight fight. We're in round one, round two. You know, Ali hit Frazier with everything, and Frazier got up. Okay, so now the market got up.
Which one's Ali? Which one's Frazier?
I would say the dude in my mind, the bear is Ali, the bull is Frazier, which they're both amazing. But for
Really,
people out
I would
there
have,
that,
I would have thought that Ali was the bull and
yeah,
Frazier
well,
was the bear.
that's I know. Well, that's what you think. Um, I think whatever. It doesn't matter. But
Well, Ali
the
dances
point is,
around. He's, he has the personality. That's the bull. That's the guy that always wants to go long. The bear is Frazier. He's reserved. He's
okay.
whatever.
Well, okay. So if we use the analogy again, which I probably won't, we'll switch it around. But the point the point being that the market took the first punch down. It went down 30%. I've never in 40 years seen the market rally back that fast on a 30% down move ever in my life. So, as you know, the algos run the show, liquidity runs the show. It's been light liquidity on the way up. On the way down, it was heavy. It usually works that way. Um, but this is round one or two of the 15 round fight. And I think when everything plays out, it's going to be very, very tough for the market to extend higher, at any point in general. So that's just my thought. Again, you got to keep an eye on the clues today. It's an interesting reaction. So on Friday, the Dow was down 250. Today, it's up 500. So even though it's up a lot, it's not that positive day over day, this reaction. And I think when people think about it, pushing tariffs a month is not anything. And if they don't come back to the table with what Trump wants, it's going to be a problem. But I do believe, and I'm going with this, that he doesn't want big tariffs. Like he's scared. Because if he wasn't, he'd say, listen, June 1, you're at 50%. See you later. Why is he not putting the 50% tariff on? That's what I don't understand. You know why? Because no one can handle it. So the
No,
bottom
right.
line is he backed off, they backed off, and here we are. But I do think it's going to be very, very difficult to make trade deals across the board. Listen, we're what, a month and a half in, and there's no deals. I mean, UK has something, but it's not a comprehensive deal. They're going to have to come back to the table for negotiations. So there's no true deals. You know, they
I
have
can't believe the only the only one that has a deal is the UK. It's been so long. It's been how many months already after, since.
Well, let's just discuss this. How many countries does he really want to make a deal with? Four? I mean, who matters? Like, he had the guy from South Africa in there. He railroaded that guy. They don't want to deal there. Well, what are we doing with them? You know what I'm saying? We want to shut them down. So, you know, it's uh, it's interesting. Again, the two stocks that I focus on is Apple and Tesla. Those two, to me, look like they could have some problems moving forward with Trump and with tariffs, etc. So I like those to the negative. I do not have a position in those, in full disclosure. The only positions that we have on were actually doing unbelievably well coming into the weekend, but today are going to get hit is short S&P SPY by a put and short Q as well. So those two are going to get hit. We are short MSTR. We're going to remain short that. We think that goes lower. Doesn't really matter to me what Bitcoin is doing. If you watch the action in that stock, it was horrendous last week, coming in about um, 20% from the highs. So we like that on the short side, even though that's up today. Um, you know, so that's really, that's it from what I'm seeing here. I don't know if you're watching any stocks or
Well,
industry
I
based.
think the big one. I think the big one tomorrow, which we didn't even cover, is Nvidia with earnings.
They're going to
So
be off the chart. I mean,
So
unbelievable earnings coming
going to
from
be
Nvidia.
unbelievable. Clearly, of course.
Unbelievable, dude. Actually, unbelievable.
So
They're gonna sell more chips than human beings. They'll have more chips than there are computers. Everyone needs two Nvidia chips for their computers. So the stock obviously went down into the 80s. Now back to 134 with a $3.5 trillion market cap. Um, 3.2,
I don't know.
crazy.
It feels like with Nvidia, like 2 years ago, pre Nvidia earnings, everybody's talking about it. Everyone's focused on it. Now, I feel like not, there's not as much interest for some reason. Do you get the sense?
No, I mean, listen, you have a $3.4 trillion stock. How much can it move? Anybody that's in it now has missed the move. Okay. You will never, and I'm saying never in our lifetime, okay, hopefully, knock on wood is long, make as much money in NVIDIA as what it's gone up. So it would have to go to a 7-8 trillion dollar market cap or more to even come close to what has happened. So I think it's damped down. I think people made fortunes in the name, which is good for them. Congratulations on that. But overall, you know, what can it move? It's a $3 trillion stock. I mean, it can move a little, but you gotta. We talked about this before. There's 25 billion shares outstanding, or some number that is massive. So to move 4 points is more than 50% of the S&P. So I think that's a lot of the issue here. Again, it can go higher. Don't get me wrong, but on a percentage basis, it's hard to move. You
Well, they
know.
already had that $5.5 billion write off from a couple months ago or 6 weeks ago when they pre-announced, and the market just didn't care. So it's going to be interesting to see
Dude, that is right in your wheelhouse, that stock, dude. What day is earnings?
tomorrow. Tomorrow,
Oh, dude, you better give us the. Let's look. Oh, do you have any stuff with you? Can we look at the straddle or
straddle. No, I don't have that priced in right now. But
hang on?
barring any kind of headline going forward, is this going to be another Iron Condor kind of day?
Ay, ay, ay. You're killing me. I don't know, but you got to pick the right side.
I'm
I,
picking both sides. I think for today.
I,
Where's the market going? It's already up 100, right?
I don't know. They could go down on the day.
Yeah, I know you want it to go down all the way, but is it going to happen?
I have
That's the
no
question.
idea. If I knew that, I would
They're not
be
letting
sitting
this
on the
go today.
beach right
They're
now.
not
We'd
going to
be
let it.
doing this
Yeah,
podcast from the beach.
you be on the beach with me, where I'm going to be
The
in about
straddle
15
is
minutes.
the straddle for today is 34, so it's kind of pricing in line to what it's been. Um,
$34.
I think we could move 34 easily. Um, I would think it would come more to the downside. The upside part of that is going to be difficult. We may look to sell the call side after the opening. Again, that product's been a little chippy this year. It's kind of flat on the year. That is the selling of both put and call spreads for our S&P Trader product, our best product, but this year has been choppy. It's funny. Believe it or not, we're soon coming into mid-year. The end of the month coming up is mid-year. So there's going to be a lot to talk about into mid-year. Talking about our trading, talking about our products, how they've done. I don't like, a lot of subscribers are micromanaging this to the day, and I respect that. But I think it's important for people that are in our products at the Opportunistic Trader to understand, let's take a snippet in time. We could look at stuff quarterly. We could look at stuff semi-annually. Obviously, we look at it every day. We trade every day. But when we want to review things, really to look at it even month over month is very, very difficult. It reminds me of being a hedge fund manager back in the day. Um, It's funny, like I had 30-day liquidity in my hedge fund, and I had people calling in, and they know who they are. 2 days before the end of the month. How you doing? What's going on? I'm like, really? You're running money from Michael Dell, okay, one of the richest men in the world. You're worried about my monthly performance right now when I'm one of 10,000 investments. But that's the mindset of people that are really not good investors. So, like, if you're utilizing my products, I would look, quarterly, semi-annually, you know, and obviously yearly, but minimally at the quarter end, not at each trade. And it's funny, I had a subscriber, unfortunately, that joined me during a period where I had a couple of losing trades that actually turned into winning trades. But they were writing in every day saying, "Oh my God, you're losing
That
money."
to
And I'm
me,
like,
yeah, that to me really feels like they were oversizing their positions.
maybe
Because
either
if
that or
100%, no, 100%. If somebody's that worried about, a day-to-day thing, that means their positions are way too big.
probably, or they can't handle like a couple losing trades. But whatever it is, I mean, I get it, and I know it's real money to everyone, and I appreciate that and think about that every day. But really, you got to look at this on a little bit longer term basis and realize how to utilize the money to make bigger P&L, which we always talk about getting bigger when you're making money, staying small, and the beauty of what we do, all our products right now. For the moment, we're going to be coming out with a couple of equity products, straight stock. But right now, we have defined risk, and defined risk is probably one of the greatest things in trading that you can have. You know what you can lose on every trade, and we don't want to lose anything, but keep it within a defined amount that you're willing to lose, and you should be okay over time because we're going to make a lot of trades during the year. Markets right now are you know shaky, and really, if you look at pretty much a long option only product, to be up in a year where the market is actually flat is pretty impressive, especially when we went down 30% and came right back. So anyway, I think this week should be fairly active. Markets are bid. They seem to have forgotten pretty much everything that has happened. To the downside, and then it's unbelievable that the S&P is basically 20% off the low, and the Nasdaq is 30% off the low. So here's where we sit, and again,
How do you think the summer's gonna go? We're a day after Memorial Day.
I don't know, dude. You told me you
Summer.
got to watch headlines every day, so who knows?
No,
It
no,
depends.
not watch headlines. React to. There's gonna be a few of them, but forget the headlines. How do you think the summer is gonna shape up? Is the market all of a sudden going to remember that there's bad news out there and there's tariffs and all that, or are they going to take this all the way into a seasonally weak September, October,
I,
like they always do?
that's yet to be seen. I think there's a lot of stuff moving forward, especially
Yeah.
with the July 9th type of date coming for a lot of countries. But here's the question: July 9th is like a month and a week away, right? How are they going to make deals with hundreds and hundreds of countries in the
Yeah, it's
next month?
problematic. Trump's sweet spot is unilateral deals. He's not bilateral deals. Sorry, that's his sweet spot. Multilateral deals, where that's not his forte. And with the EU, I see that as a problem because you're almost forced to do multilateral deals. There's so many countries. Like the UK is just one country. He got that done. He can't get anything else done yet.
I don't know what in reality, I don't know what he got done. Nobody really knows what that deal encompasses. I think, Listen, I'm just surprised that they're not parading them in to the White House to do deals. And that to me is sort of my cue to realize that there may be no deals here or not a lot of deals because they're
There's
not.
certainly been no cheerleading from all these countries. All the cheerleading's been coming from the U.S. side.
We're breaking down to them, which is shocking. like, like if he doesn't want to do a deal with the EU, why is he taking a call to talk about it? They should be coming to him paper in hand like this going, we want to do all of this for you, please, let's do a deal. It's not like that. It's weird. It's almost like they shunned him and he got pissed off, went to 50% tariffs. They called in and they're like, Donald, please don't do 50, give us a chance. They get an extra month. But I don't think they came to us, to be honest with you. I think that we went to them the same way we went to China. So I think the power of the deal and the tariffs isn't as powerful because the countries know that, listen, we talked about it early on. He wants manufacturing brought back here, which doesn't make a lot of sense to me. But if that's the case, it's going to take years and years and years. And he said yesterday, he's like, if you're going to build a factory here, we'll give you a break. I don't know. Why does he want all these other countries in our country building products and getting our technology, getting our resource and getting our people? I don't get it. I don't get the logic why TSM, to me, I would think that's an intelligence breach. Why do we want TSM, Taiwan Semiconductor, in the United States making chips with our people? I don't get it. I don't see the upside. But somehow everyone thinks that's good. But really, we're here to show everybody, you know, what we look at, how we trade, and how to make money. So really, we want to be, you know, agnostic to really the market move. We want to be opinionated, but we want to respect the market move. So, right now going over it, S&P is up 80, 1.4%. All indexes are up anywhere from 1.5 to 1.2. Um, right now, bonds are holding a bid, which is pretty good. Still high yields, 445. Yeah, we did trade 460, but 445 is still, higher levels. Market is shrugging that off. The dollar, it's funny. I want to get along the dollar against currencies here, against the British, the euro, and the yen, but it's probably not the right time. So we're going to wait a little bit more, see if they can dislocate more, but we're not understanding why the dollar is so weak if things are so good. And like you said, we got the big Japanese auction. Their rates, which we'll go over a little bit more tomorrow, are really high, and so are the UK. Um, on the longer end of the curve. Like no one is buying the long end, which is which is interesting because that's always the place where people were buying because you're locking in more yield. Even though it's a longer period. Now people don't want to be stuck in that because it feels to me like they think there's going to be some kind of dislocation in yield. So we'll keep an eye on that. Gold's been a weird one. Again, it's back in the 32 handle. Um, Still up a lot for the year, up 25%, the best performing commodity out there so far. Energy down about 15% for the year. Another weird one. So there's been divergences everywhere, but there's going to be a lot of trading opportunity. But right now, again, we're sitting with the positions that we have. We're not going to add. I think Apple looks weak. I think there could be an opportunity to the downside there off more headline risk. You said Nvidia is tomorrow. Nvidia is not what it used to be as far as being so market impactful, but definitely keep an eye on that. Again, that number, that guy is not telling you the true story. Okay. That guy is That he should be wearing pom poms and a dress. No offense, he is the biggest cheerleader I've ever seen. Um, and really, for today, to we're going to look to sell maybe some upside call spreads for the day, depending on the pricing, about a 0.5% or less away from the market. And then if the market happens to trend down a little, maybe look at a put spread. But right now, markets have been very, very stable coming into the opening. We're running a little bit late. It's about 9:15, so I want to give everybody a chance to get ready for the opening. And I'll throw it to you for some closing remarks, and then I'll close it up.
Yeah, it seems like the markets are ready to run up over the weekend. Maybe probably not too much room to the upside, and it doesn't feel like the market wants to give everything back either. So yeah, I think what you're saying is probably very valid. Look for the call spread, maybe 30, 40 points up. I don't know what you're going to get 40 points up, but about 0.5%, as you said. I'm looking for that in both directions today. That's I think barring any headlines up until the earnings report tomorrow, we're probably going to be up and down 30. And then tonight, I will be looking at that Japanese auction. I think we will get some action in the currency market, in the gold market, and most probably in the equity market as well.
Well, I'll do this. So I will 100% be sleeping during that auction. So if anything crazy happens,
I will wake
you
you
can give
up.
me a ring. I'll have my cell phone on, ready to go. I don't expect a lot
I'll
off.
be at your door now that I'm in Florida
Oh,
for the
no, you
weekend.
won't. You got to get through a couple
I
of
will.
gates. You got to get through a couple of gates to get me, son.
I
I'm
got all
very
your
well
codes.
guarded.
I got all your codes, Unc.
I hope they don't run when we have a problem. But
The
we got
gatekeeper's
a
going to
lot
be
of
like, oh
security.
my God, it's another client with a max loss.
We got a lot of security. But again, I think I'm not so convinced today is a zero. I think that we will get some stuff. Maybe we'll get some headlines or whatever. But I think there'll be some trading today. People are, pretty much back from the holiday. It's a weird setup. I remember when I was
It
young,
is. It
Memorial
is
Day
very
used to
weird.
be the last weekend in May, but it's no longer that. So I think people are back at the desk, ready to go. I would keep an eye again on the bond market today. 10-year overnight had an interesting trade. It was lower. Now I'm looking at it and it's slightly higher, only up 5 ticks, about 5 ticks off the high, gave back half the move. Keep an eye on that. I do think that could go negative today, so maybe that'll put a wrench in the market. But overall, keep your head up, look at headlines, and good luck trading today. Again, maybe an upside call spread. Probably won't get a lot for it, but maybe that's the play. I wish everybody luck and peace. See everybody tomorrow.